Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the daily time frame, where we're looking for an impulsive structure to the upside and higher prices to be expected. In this scenario, we're looking for a sideways ranging structure in a wave 4 before then continuation to the upside in a wave 5. The common retracement target for a wave 4 is the wave 4 of a lower degree, which is the previous range over here, giving you a target area between 93.5k and 86.6k. Inside this white wave 3, you can count 1, 2, 3, 4, 5, therefore this is your lower degree wave 4. But even if you would switch some things around and you would count a finished white impulse to the upside, therefore a finished blue 3, then you are looking for your blue wave 4, but the target area is the same. So therefore it is generally better to keep things very simple. One just waits for a bigger range here, eventually price to continue to the upside in this scenario, and then you take it from there. The target area here is very clear. If we then look at some additional support areas inside this target area, then you can see that to the downside I have two blue boxes. The first one here is between 90k and 89.4k, and then we have 87.4k to 86.9k. The bearish scenario on the daily time frame is that you have a finished impulsive structure. So we had our big range here, WXY, and then a impulse 1, 2, 3, 4, and then an extended wave 5. So here we then have 1, 2, 3, 4, no overlap between wave 1 and 4, which is also something you want to see. You don't like to see overlap in an impulse between wave 1 and 4, as that would be an invalidation, and you can see it didn't happen. And then you have your wave 5 to the upside, which then has to be counted as 1, 2, 3, 4, 5, a finished impulse extended wave 5. Now an extended wave 5, however, is a lot less common compared to an extended wave 3. An extended wave 5 is rare. The most common impulse is 1, 2, 3, 4, 5, where you have an extended wave 3 and also the highest amount of volume in your wave 3. Here you have an extended 5 and the highest amount of volume is in your wave 5, which is rare, and therefore it lowers the probabilities for this scenario on the daily time frame compared to the bullish scenario. If we then go to the 1 hour time frame, we are looking for a 3-wave corrective structure in that wave 4 and then look for continuation up in a wave 5. And there's currently two scenarios that I keep an eye on. The first one here is an impulse to the downside, 1, 2, 3, 4, 5, finishing wave A. Look for a 3-wave corrective structure to the upside in a wave B, and then another, a 5-wave impulsive move to the downside in a wave C to hit some of these support levels I mentioned earlier. But here you can see the horizontals representing those target boxes that I mentioned earlier. So here value area high at 91.4k daily and a point of control daily and a value area low. Now after a 3-wave zigzag in an ABC, you then look for price to continue towards the upside. The invalidation for this scenario is price moving to the upside, hitting the low here of your wave 1, as a wave 1 and 4 are not allowed to overlap. Alternatively, you also have a sideways double combo, a WXY, and then look for price to move towards the upside. In this case, you then have a zigzag ABC in your wave W, look for a bigger bounce and range in a wave X, and then price to move to the downside in a wave Y. The resistance area to the upside is a daily here at 98k, and then the daily naked point of control at 99.4k. Looking at the CVD divergences since the recent low, you can see we have a higher low on price, lower low on the CVD, which is a bullish CVD divergence. I preferably also like to see a change of market structure, which at the moment is not the case as price is just moving down. So what I would like to see preferably is price to make a couple of higher highs, higher lows, and then see consistent bullish CVD divergences coming in, which would be good to see. Of course, the same is true for the bearish scenario, where you're looking for price to build more bearish CVD divergences as the market structure is already bearish. Now, if you then look at the news, then we also have some news this week. Tuesday, November 26th, which is today, 8 p.m. Central European Time. We have some news, and especially tomorrow should be very interesting. Wednesday, November 27th, 2:30 p.m. Central European Time. Make sure you trade safe as the volatility might increase. And if we then look at the probabilities of the different scenarios, then on the daily time frame, the probabilities are higher for the bullish scenario compared to the bearish scenario. And on the 1 hour time frame, we are actually just looking for a bounce to come in a wave B or a wave X, because if we're looking for a wave B, we want to see one more low in A and then get a bounce in a wave B. And if we are looking for a WXY, then we're already looking for a bit of a bounce in X. So therefore, it's interesting to keep an eye on some signs of strength, and whatever that means for you. It can be CVD, RSI, market structure, candles, patterns, whatever it is. But yeah, we're looking for a bit of a bounce to come in a wave B or a wave X. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.